The logical consequences of coronavirus is its impact on the stock market. Stock market are an excellent cause of economic activity. Forex market in the long run follow the developments in each country's economy. However, for this time, it is looking at the effect of previous pandemic on the stock market and allows to venture as to how much the forex market will be affected. The table shown the financial exchange in the US and the worldwide index compiled by Morgan Stanley. The US economy is the world's largest and the trade exchange influence there will fundamentally be repercussions all through the world. This table had little negative impact on global economies. Statistically speaking, it probably looks like there is a positive correlation between pandemics and positive performance of the financial exchange. The impact from COVID-19 pandemic on foreign exchange market for the international countries may be different. Furthermore, this time, governments in certain countries are beginning to take action to try and stop the spread of the epidemic. In some countries, imposing quarantines individually or even on whole towns. Stock markets are certainly reacting differently this time round also. Most major stock markets have taken a hit since news of coronavirus hit the headlines. How much coronavirus impacts on forex market? A decelerating economy would weaken the country's currency. However, a global crisis with the most major economies affected may see the forex market muted. The coronavirus impacts on the forex market could affect certain currency greatly for a long time. To assess the current state of forex trading and that these factors go beyond simply crunching the data, one of the biggest factors is unemployment. The mounting job losses are what make COVID-19 as bad as and potentially worse than previous crises such as the 2008 global financial crisis or the Great Depression. 30 million people filed for unemployment. Economic projection shows that the longer it takes for the number of US COVID-19 cases to peak, the slower the recovery, with GDP shrinking by as much as 6%. Across the world, uncertainty around COVID-19 is more than 3 times higher than with any pandemic in the last 25 years. Historically, this uncertainty has coincided with lower growth and tighter financial conditions. Global foreign direct investment is also projected to decline by 40% in 2020. Thus, it will cause long-lasting damage to worldwide production and also supply chains. In 2020, the World Trade Organization global trade volume by 13 to 32% compared to 2019. This will expected to affect the price and availability of goods such as laptops, machines, and toilet papers.